Well, in case you missed it this morning, before we got our daytime session underway, USDA had a little bit of information related to export business. We had the weekly export sales report that came out. And then on top of that, they had another flash sale to talk about. So on the weekly numbers, let's kind of recap what we had. They were actually pretty good on the grain. Corn, 925,900 tons. Soybeans, 1.27 million. And soy meal, look at that, 333,900 tons sold last week, 2,200 tons of soy oil, and the wheat, 561,400 tons sold last week. And then this morning, they had an overnight sale of some soybeans that were sold to China. It was 106,000 tons, although it's for deferred delivery. It's for next year's crop, which was intriguing. Well, as we look at our market action with our quotes provided by bar chart, everything has been higher this morning. So let's go to the corn board here, and right now March is up 9 at 683 3/4, just one tick from our high of the day. And December is up 4 cents at 592. Soybean trade, it's been chopping all over the place, but now it's firming up again. March beans 14 higher. Last trade is now at 15.16 and we currently have the new crop November soybeans coming in with a price of 13.52 1/4. It got to 13.50 early on, sold off a bit. And now it's regaining some momentum here. So now we're 7.5 higher on that November new crop. Meanwhile, let's switch over to the wheat. We'll start in Chicago. Double-digit gains here. March is up 12 3/4 at 7.54. And that July contract, 12 1/4 higher. Kansas City wheat, the March up 16 1/4 at 8.59 That's leading the charge. It's showing more strength than all the other contract months. And July new crop wheat is up 13.5 cents. Minneapolis spring wheat is 5 3/4 higher at 9.15 1/4, and we have July up 8 1/4 cents. Cotton market, big moves there. March up 162 points at 88.28, even though it's cooled off a little bit from its earlier high. December up 99 points at 86.52. I'm joined by Ted Seifried of Zaner Ag Hedge in Chicago. Ted, a little excitement in the markets here today for Thursday. Didn't quite see that one coming. What do you make of it anyway? Can it stick?
Yeah, well, first of all, as you pointed out, Marlon, export sales were really pretty good across the board, albeit within expectations, but really everything was towards the higher end of expectations, and these are much better numbers than what we had been seeing. So we have that export business, we have that demand side of things, but then also, look at wheat. Indian wheat prices hitting record highs. We have our own production concerns. And then, wheat has just been so very oversold for quite some time that at some point, it's got to have a bit of a balance. So wheat trying to go higher, corn really benefiting from that. Those corn export sales, as we mentioned, have started to turn back on, which is a really nice thing. And overall, you've got this sort of inflation on, this sort of risk on trade happening here today. Crude oil looking like it has put in maybe a bit of a longer term bottom, at least for now. And commodities as a whole are getting a bit of a bid here today, Marlon.
Yeah, that crude that you're talking about, let's bring that back up again here for a second. On the West Texas Intermediate crude, the nearby March contract is rallying up to 81.22 per barrel. So that is up $1.07 here this morning. We have been watching the weakening of the dollar recently, but Ted, today it's firming up again a little bit. Maybe a little bit of a drag on the market, but it doesn't seem to be. March is now, we'll call it 400 points higher at 101.815. And for those of you wondering what the equity markets are doing, not much. The Dow Jones Industrial Average Futures show the March just up 16 points, is all at 33,839. We'll come back and talk more with Ted Seifried about our livestock trade when we return after this. All right, we're back with you. I'm Marlon Bowling, and let's take a look at our livestock trade today. And this is against the backdrop of some really strong export sales last week on the beef and also on the pork. And yet we opened up and we're continuing to trade lower today. You have April live cattle with a quote of 161.12 right now. We are still 42 cents lower on the day. It doesn't seem to really match the fundamentals if you go by the export sales numbers. June live cattle are down 32 cents at 157.87. Okay, well, let's switch over to the feeder cattle market. Well, the corn is a little bit higher today, so you have March feeders going down by 52 cents at 183.22. Now, I guess you can give it a pass on account of that. That's understandable. April feeders now 80 lower at 187.55. And then you get to the lean hogs. And lean hogs are lower today, too. You have April down 57 at 84.75. Let's go back to Ted Seifried and talk about this from the cattle perspective here. Weaker across the board. The export sales were terrific, but boy, I tell you what, the wholesale beef trade, the beef cutout values continue to sag. And gosh, it sounds, Ted, like maybe the cash market may give up a little ground this week.
Yeah, you're absolutely right. And after 4 days of higher trade in cattle, we were due for a little bit of a cooling off. Now we're not down sharply, so that's I'd say pretty optimistic. But like you said, feeder cattle down fairly sharply because of what's happening over in corn. Like you said, we can give that a pass for now. In the meantime, that hog market, oh man, like you said, really very good export sales, yet we just can't find a bid in the hogs, and that is really disconcerting. This outside down day after really trying to find some support here, if we close down here, that's really not going to have a good look on the chart. One thing we talked about at the end of the last segment that I just wanted to touch on really quickly, it's fairly rare where you have strength in the dollar and strength in commodities at the same time. But there's a reasonable rationale behind that, and that's because GDP numbers came in better than expected. That provides confidence in the greenback, hence strength in the dollar, but it also suggests that inflation could be coming back, so therefore strength in commodities. The stock market is the one thing that doesn't get benefit from that because it opens the door for more Fed rate hikes. So that is today in a nutshell. I just thought I'd hit that for you there, Marlon.
Yeah, there's all kinds of stuff affecting the markets from all kinds of different angles. So interesting stuff. Ted, thank you for explaining all that and connecting all the dots. Appreciate that very much. Ted Seifried of Zaner Ag Hedge with us. Tammy, that's a look at our markets. There you go.
Right.